Hello traders, hello traders. Today is the 11th of July 2011 and happy trading day to you all. London is now open, okay, but New York is not yet open. The time in London is 10:30 a.m. Eastern time and 5:30 Eastern time, okay. Now we are looking at the 3-minute chart, okay. You know that when I started trading first, this was my favorite time frame, and I was stubbornly focusing only on a 3-minute chart, like the high frequency traders. That's what I would do before. I come in every morning, or everything is set out on a 3-minute chart with all my indicators, okay, market profiles, okay, all my my special MACD and the stochastic, okay. You know why we give the name www.stochasticmagdi.com to our website? That was the reason. And I will come in, I don't check the economy news, I don't check the higher time frame, and I come to my 3-minute chart and I do what I want to do and I go away. That's all. That's what I was doing before. Because I was new trader, okay, I'll make money some days and I'll give it back another day, and it's just going up and down, okay. But I was enjoying the excitement about it until, okay, alright, I decided to go a bit deeper because I know that there are things I need to look at, okay. So if you are a new trader also doing something that yourself, you know, don't say that you do not know, okay. Usually traders know, okay, what they're supposed to stop doing. They know. All traders know, okay, they know, okay. But I don't know, for one reason or another, they cut corners. Okay, we all do cut corners, okay. So don't blame yourself that you are there is a time process. But if you have been doing this for a long time, if you have been doing this for more than 3 years, then you have to sit down now and do it properly, okay. You have to sit down and do it properly, okay. We see traders coming to us, they are new traders, we understand they're going through what we call exploration period. They try this, they try this, they try this, they try this, and they are doing all sorts of things. And one day, okay, they get the message that the price is the #1 indicator, that you don't mess up with the price, okay. And then suddenly, okay, and they also understand that the higher time frame command the lower time frame, and they start seeing things clearly and they start working, okay, better. And we see some traders go around and come back and do it properly, and but do not be late to do it properly. The goal, okay, our goal is to do better today, okay. Today is Monday. We want to do better today, this Monday, than last Friday. That's my goal today. That's all. I want to do better today. What I did, the way I trade last Friday, my goal today is to do better than last Friday. I don't want to. That's simple goal. That's a very simple goal. If I've done that today, I know that my day has been successful. Okay. Enough of my blah 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 blah. All right. This video is about level 2, a high frequency trading. You have noticed that recently I've been barking, okay, so to speak, barking about this level 2 and also high frequency trading. Now I'm talking about level 2 high frequency trading, okay. I hope you are enjoying this series of level 2 high frequency trading. Okay, so for those of you who are new to us, we are the TSTWSYS08 traders, okay, and our website is www.stochastic-magdi.com. Alright, this video is for educational purposes only. It's neither a solicitation nor an offer to buy or sell any financial instrument. For all trade, we must respect, okay, or adhere to the 5% and money management rule. If you have $1,000, it means that if you're going to place a trade today, okay, the total amount of all the trade should not exceed 5% of your $1,000, which means $50 you can only trade with, okay. But if you start increasing your account, it means that your 5% is also growing, which gives you more room to play with. So if for one reason anything happens, you're not going to give away more than 5% of your trading account. Credit to FSCM. FSCM was the people that give this clear-cut information, excellent money management, no nonsense, no blah 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 blah. They keep it very simple, and it makes more sense to myself. As you know, I like things to be very simple and keep it very simple, okay. what we have said is that the price is always doing three things. Okay, whether you are using algorithm, you are using a projection, you are using a run indicator, you are using a pitchfork tool, whether you have been trading 100 years, 50 years, all the professional, the experienced traders, they will tell you one thing: the price is always doing three things. You see here, it's going horizontal. The price will go horizontal in a channel. Either the channel is horizontal, you see here on this 3-minute chart, or the channel, okay, is rising. This is one example here. That's what the price is doing all the time. Either it's in a horizontal channel, or the channel is rising, or the channel is going down. The price is always in a channel. Okay, this was happened. The day I discovered this, I was so happy. Okay, so keep it very simple. Okay, now there are some traders who has been using robot for years. All right, for some traders, okay, some people are advanced in age. Okay, so they don't want to waste their time going round doing the hard work, and they use robot. We can understand those people. But some traders, they can trade, but they are not disciplined enough, okay, to take it and do it themselves. So they buy robots. What I say to traders that if you are using a trading robot, okay, ask to know what is inside the black box. Okay, you can build your own trading robot, which means you build a system that you convert into a software. A TSTW 24, TSTWSY08, TSTWSY008 are not, repeat, not trading software, not a trading robot, and we do not do trading robot. We do trading system. Trader will sit down and learn it and do it properly, using the technical and the fundamental. Okay, that's our approach. Talking about level 2 high frequency trading, what's happening? For those who are using level 2, they have their screen. They will see the orders coming in, okay, buy, or they will see on the screen the orders being buy. This person buy $1 million, this one buy $100, and there are different prices. And the liquidity traders, okay, you will see very often on YouTube a lot of level 2 traders on the market. I don't use level 2 for my trading decision. I use the price itself. I want to show you something here. Looking at the price, we can know what a level 2 trader is seeing. See, when I draw this horizontal line here, you can see I'm on the 3-minute chart. If you want to use the price itself as a level 2 instrument, okay, you have to go to a lower time frame, 2-minute chart, 3-minute chart, maximum say 5-minute chart. But I'll prefer 3-minute chart because that's where I feel comfortable with. Okay, so you see here the price came to this level here and then turn around. Okay, this is an important level on this 3-minute chart. Okay, on this 3-minute chart. Then you went up to this level again and turn around here. This is again a very important level. Okay, on this 3-minute chart. Okay, and then you come up again to the same zone. Okay, and turn around again. This is an important price level. My apology for that. And then again you come to the same level again and turn around again. So this is confirming to us, in fact, this level is a special important price level, because anytime the price coming to that level, it's just turning around, which means some people place orders here to sell, which is telling me the price is not hiding anything. That's a stable data anywhere. The price does not hide anything. So the price is revealing to me what is going on in the market. People are using marketing, people are using RSI, people are using a Bollinger Band, people are taking decisions, people are using robot, all sorts of trading system, all sorts of methods. Okay, people are doing all sorts of things, but the price does not hide what's going on. People are selling here, 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 here. This one just happened now. Okay, so the price is not fooling me. The price is not lying to me. The price is honest, faithful like a dog, revealing to me exactly what is happening here. Okay, so somebody who is using level 2 will see that there are orders being placed here to sell, and he will know how much people are taking. Okay, how much orders coming into the market, whether it's a big orders, a small orders, he will see them. But he will see on he or her screen, whether it's a lady, beautiful, gorgeous lady, okay, or a man, he or she will see on the screen, okay, all the orders, the size of the orders, and also the direction, whether it's a sell or buy, and he or she will decide to follow these orders in order to participate in the direction of the price. Here again, you can see that the price came to this level here and turn around. Okay, this is an important price level. It did the same thing here. It came down a bit and then went up on the 3-minute chart. So this is an important price level. Important price level, same important price level. Price come again to the same level here, important price level, and turn around. You see how it went fast here? Because traders notice here that something has happened here. It went up here, touch it again, went up here. They were waiting for it to come back to it. As soon as it come here and turn around, people bought it fast. It went back up. Okay? Now, people did exactly turn around again here, turn around again here, turn around again here. Somebody who is using level 2 will see the orders coming in this level here. He or she, okay, will see the size of the orders and also whether it's a buy or sell. Okay, there are other games being played with level 2, and he or she will make their decision. Those who have built, okay, this level 2, they are smart traders. These are people who were trading in the past, paying attention to the price itself and the orders being calm. Okay, like they see the order in the pitch, they will see the orders, and that's how they trade. They see the orders in the exchanges. Okay, the currency, we don't use exchanges. Okay, so it's just open market for us. But I'm using the currency here to show you something that is happening on our market, whether you are trading commodity, crude oil, blah 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 blah. Orders are coming in. So this video is about level 2 high frequency trading. Okay, so what high frequency, now someone who is using liquidity trader will see on his level 2 screen all the orders and decide, and will decide to enter the market here to buy, because he see a lot of buy orders in this price level, and he or she also may decide to participate in the direction of the price. That's why he says. Okay, so that's how he make his decision. This is how the liquidity traders are trading. Okay, now another thing that we can say, the high frequency traders, talking about level 2, they are using level 2 also. Last time I talked about the technical part of the high frequency trading. In this section, we are talking about level 2 section, okay, of high frequency trading. So a high frequency traders, because they are very close to the exchange, they can see the orders very fast. They process all the data very fast. They have what I call unfair advantage to process the order before most of the ordinary liquidity traders that sit in front of their computers. So because these people position their computers very close, okay, to the exchanges, so they see orders like this. They know that, okay, at this level of 10339 for this Australian dollar, Canadian dollar, okay, 10339, orders been coming in. They see the size. Suppose someone is buying 100,000 shares at this level each time. They see it. One order coming, 100,000 shares, 10339. That's the level. They see another second order coming in at 10339, another 100,000, and then they see another order coming in at 10339, another 100,000. Call it like we are talking like we are dealing with share, 100,000 orders coming in, and then again see here 10339, another 100,000 orders. Okay, so he's saying that, okay, somebody is buying. No, somebody's selling in this particular, because we're on the top here. Somebody's selling here 100,000, but is selling in chunks, small pieces. You see, you remember what I told you about the elephant and the ant? Okay, that's how they are biting the market. They are biting the market bit by bit. These are smart. They are biting the market bit by bit, chunk by chunk. Okay, they don't want to chew everything all together. They want to chew it in small pieces. That's what they are doing. So they see these orders, and then they will place order very fast, because they are very close to the exchange. They will see the orders coming in fast, position themselves to take advantage of that, and they will sell also. But what they will do, okay, they will sell fast, okay, and within a minute they will take their profit. Now, by the time somebody who is sitting in front of their computer, ordinary liquidity trader sitting in front of their computer and see the order, by the time he enter the trade, he see this order, he want to profit from the direction of the market. By the time he enter the market, the high frequency traders, okay, are already out. They are already out. So the ordinary level 2 traders, okay, lose, because these orders has disappeared, okay, because they don't last, okay, which make trading more very fast and a high competitive game now. Okay, the same thing will happen here. We may see orders than 1 million, okay, orders buy, another 1 million order buy, another 1 million order buy. The high frequency computers will quickly detect that, because these are computers. They are not persons sitting doing it. These are programs. They detect the order very fast, because they are near the exchanges, and they will place orders to buy. This is about high frequency trading and level 2, because they see one particular order coming in, okay, chunk by chunk in a pieces, okay, 1 million, 1 million share, 1 million share, 1 million share at one particular price level. If it happens 2 or 3 times, the computer will react to it, okay, and also follow the direction of that orders, okay, and they can perfectly control the market and change the direction of the market because they are on a lower time frame doing what they want to do. What is a bit crazy, even though these people are smart traders, what is crazy and dangerous, like I told you before, is that these people do not pay attention to the higher time frame. They don't, okay, they are on the 3-minute chart, they are on the 5-minute chart. Because these people lost money in the past, as I told you, most of the companies that were trading before, they lost a lot of money in 2008 because they didn't know that when the market is overbought and they can't detect clearly that the market is oversold and they will stay in the market too long, they decided to play, okay, the scalping game, in, out, fast. But because they have a lot of money, they can mess up the market, and a lot of liquidity traders are finding it very, very difficult to follow these computers, because by the time you see all this on your screen, you want to enter back, you are out, okay? What my view is, like I said before, like I'm showing you here, I did not use level 2, but I know what's happening here because the price does not hide anything. Somebody is selling here. I prefer to sell in this zone. Why? Looking at the higher time frame, this is what the high frequency traders are not doing, okay? They are not going to the higher time frame. I will start from the higher time frame, which is the yearly chart, my crazy yearly chart, okay, of this Australian dollar, Canadian dollar, and I will know all my critical price level, especially my smart median line. Then I will move to the monthly chart, you see, and then I see the bigger picture. There is a Fibonacci pattern here on this monthly chart. We talked about it before. I'm not going to talk about it again. There's a Fibonacci pattern here, okay. We are in overbought zone also. That's another thing. I do not, okay, swing trade in the bullish direction, so to speak, in overbought zone. We can perfectly day trade, buying and selling, day trade. If you want to swing trade, do not swing trade, okay, to the upside in the overbought zone, okay. Don't do it, okay. So we are in overbought zone. So what's my strategy? My strategy is to give priority to sell signal. That's what I will do, because we are in overbought zone. If I receive a clear-cut signal to sell, I will sell, but I will be more careful, okay, if I'm buying. But if you are a high frequency trader and you do not know anything about high time frame and multiple time frame trading, a top-down trading system, okay, and you are just on the 3-minute chart, 2-minute chart, set your program, you can mess up the market big time, or create a crash, or what they call a flash crash, because you are just making decision on one single time frame according to what you see. But this is just a piece of the market. You're just looking at one portion of the market, which is 3-minute chart. So if you go to the 2-minute chart, that's another piece now, okay. Somebody on the 5-minute chart will see a different piece, okay. But the market is not a piece, okay. It's a body. It's one unit. It's not a piece. One time frame is not better than the other one. It's just a different picture. It's like taking picture in a different position. It's just simple. So you are standing, you take one picture. You bend down, you take one picture. You lower yourself, you bend down. You lay on the floor, you take a picture. You are swimming, you take a picture. It's just taking a picture in a different position. Okay? You are dancing, you take a picture. So this is what we are seeing. So somebody on a 30-minute chart will see something like this. Somebody else that is on a daily chart will see something like this. But it's the same price we are all looking at. This is where people get confused and they get into trouble. And the high frequency traders position themselves either on the 2-minute chart, or some of them even on the 1-minute chart, because they have money to do all this up and down very fast, very in, out. And I'm telling you, they are making a lot of money for the time being, because they change the game now. It will take some time before the liquidity traders will understand how to play together with these people. So they have what we call an unfair advantage, the monopoly, so to speak. But it will take some time before ordinary traders will know how to play a fair game with these high frequency traders, okay? And that's where the problem will start, okay? Because then the high frequency traders have to defend themselves, and we will see But if they are honest, okay, traders, they will follow the price and start using at the end of the day. We're going to come back to the what we call the stable data in the market. The stable data remain intact. You see, this is what I like about the stable data in the market. Like Elliott wave theory is a stable data. The Fibonacci pattern is a stable data. The higher time frame command the lower time frame. This is a stable data. The price does not hide anything. That's a stable data. So those stable data does not change. Whichever instrument, whichever manipulation, whichever blah 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 blah, as I like to put it to you, is happening in the market. The stable data remain intact. Okay, the market pattern remain intact. Price will trend. Price will pause. Price will trend again. Trend, pause, trend. These are stable data. You see here, the price did trend and then the price pause. This one nobody can change it. It will happen on all time frame. It happen everywhere. Same thing for the Fibonacci. Okay, same thing for the Elliott wave. These are stable data. So when we are building or we are trading, we use stable data. That's why we say to our traders, stay away from the trading robot unless you build it yourself, or they allow you to see what is inside the black box, or you understand what the black box is doing. Okay, if you know it, that's fine. So you own it now. You must own it. So when you want to purchase our trading system, we say own it. Practice, 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 and own it. It becomes yours. You understand it like we understand it, and use it like the way we use it. Simple. Okay. So but the stable data is not right. So we are talking about level 2 and higher frequency trading. So we see now, I'll show you where the orders is, how you can use the price to see the orders. Okay, you don't see the size of it, but you know that there are people buying here and there are people selling here, looking at the price itself. Okay, if you want to see different thing, same thing here. You see the price around fast over here, and then you touch it here, you turn around. Okay, somebody sold it here. Come back again, touch it again, and somebody sold it again. So somebody sold it here, and somebody sold it here. And then you turn around again here. Okay, somebody sold it again. And fourth time somebody sold it again. So you can see that somebody was selling here. So they sold it here, they sold it here, they sold it here, and they sold it here. Okay, this was during the Asia session. If this was during the London session, I will sell. Why? Because we are in overbought zone. I give priority to selling. I will sell. I will sell myself with a tiny stop loss. Somewhere here I will sell. Because we are in overbought zone, I'm giving priority to selling. I will sell. And finally, because somebody has been selling, there are orders being placed sell. They were busy selling here. They were busy selling. And finally, the bear control the price and push it down. Okay, you see, that's why. What's happened here? Okay, but when traders are trading, they are too technical. Here again, you see, somebody bought it here, the price went up a bit. Somebody bought it again, price went up. So level 2 trader at this point in time, we see the size of the orders. That somebody buy 1 million, somebody buy 1 million, somebody buy 100,000, somebody buy 500,000. So the liquidity trader get excited, see the volume, the size of the orders, and also, okay, whether it's a sell or buy, he or she will decide to enter the trade here and sell, waiting for the price to finally comply. And comply finally here. Again, a liquidity trader will see the orders coming in, buy here at the same level, buy at the same level, buy at the same level, buy at the same level. You see 4 orders like this. If it's serious orders, if this are not fake orders, straight away he or she will buy, and then finally the price went up. You see on a 3-minute chart. Okay, but now we are not using level 2. We are using the price itself as a level 2. So watching the price on this lower time frame, he hit it, he hit it, he hit it, he hit it. Okay, something is going on here. So draw your channel and wait for it to break it, and finally break it and crack back down. Projection of the channel. Same thing he did here. He touch it, touch it, touch it. So the high frequency trader will see orders in these zones as somebody is selling in chunks here. So you see people are selling 1,000, 1,000, 200,000. If high frequency, because they are very close to the exchange, they will quickly take advantage of it and sell it. Sometimes they will force the price down very fast with volatility. If there is a low volume and these people come in, they will create a volatility down, and fast they will take their profit. By the time ordinary liquidity trader reacts, it's too late. They are out. They run off. But what are they doing? You cannot blame them. You can only take advantage of them or follow them. That's why we are doing the video, so you also can understand how the game is played now. Okay, So this is about level 2. So with my 3-minute chart, I can know what's happening in this market. Okay, even though I don't have the size of the orders, but all I'm using, you see here, it comes to the same zone again, is returning back up. This is how the bank, they make their money, because the bank themselves, they are bad traders, and they don't trade very well. That's what I'm saying. They don't trade very well. But what we call market specialists, these are the best traders. If you see a market specialist, okay, ask him few questions. Okay, so this is it. So this is what's happening. So we can see the orders, okay, on the price itself, but you need to go to lower time frame. This video is about level 2 and high frequency trading and what's happening in the market. But another thing I want to talk to you about is that traders are too technical. My approach is the news, the fundamentals, and the technical. Now, I'm more technical than fundamental, but I know that if you combine both, you will always, okay, be on the right side of the market. So suppose, because the market is now, okay, in the overbought zone, okay, I'm willing, I'm happier, okay, to take, okay, a bearish signal. I will feel like lying to myself if I'm taking bullish signal, because I know, according to my calculation, that I'm in overbought zone. So I don't want to trade against myself, okay. But then I need some excuse, some validation, some signal to allow me to enter the trade. So I'll have to check the news and check the fundamental regarding this financial instrument. In this particular case, I'm dealing with Australian dollar, Canadian dollar. So you can go to Google Finance, you can go to Yahoo Finance, you can go to Financial Times, excellent stuff at Financial Times also, Financial Times, and check what's going on today. What traders are doing. Canada, okay, at 8:15 Eastern Time, okay, you see the red envelope here, housing start, important news is about to be released regarding the Canada, okay. Now, some traders will start playing the game because the forecast, the analyst forecast is lower than the previous data, so it's bearish, okay. So they start placing orders to sell, okay, to sell Canadian dollar against any other currency, okay. That's some people, they will see the forecast and the previous data. If it's bearish, they will start playing it before the actual data come out. They do it all the time, and they will start adjusting their portfolio, because a very important red, you see, high impact news is about to be released today at 8:15, okay. So they are adjusting their portfolio, so the market may be consolidating, waiting for that important news. Another important news is that the Bank of Canada Business Outlook Survey, okay, the Bank of Canada Business Outlook Survey is also due at 10:30 a.m. Eastern Time. So the ball is rolling, okay. That's what we are talking about. The ball is rolling. So traders are taking position and looking at the forecast, and looking at also the previous data, and playing the ball, waiting for important news. This is what we are talking about. The fundamental and the news and the leaders can change the direction of the market instantly. And these are the heart of the trading triangle, okay. You can go to www.youtube.com/Jotrio, look for trading triangle, okay, and understand a little bit about trading triangle. So from the technical, we move down to the fundamental. The week is starting today, Monday. We want to know what's going to happen. So if you are busy, if you want to trade, okay, the Australian dollar, Canadian dollar, you have to know what is the problem, or you have to check the news regarding Australia and Canada. Know something that will back your decision, okay. So looking into the future, so to speak, okay, again tomorrow on Tuesday at 8:30 a.m. Eastern Time, there is a trade balance for the Canada. Trade balance for Canada. Again, the analyst forecast is bearish, okay. So traders sentiment is bearish towards Canada right now. Again, if you are trading the US dollar, there is also a trade balance tomorrow for the US dollar. So you know what the traders are thinking, what the bank are trading, what the liquidity traders are thinking. And also tomorrow again at 2 p.m. okay, Eastern Time, okay, FOMC meeting minutes, okay, will be released. So this is how you do it. You combine the fundamental with the news, okay. As I told you before, so this is how you will do it. So it's not technical alone, fundamental. So if you are trading stock, you check the balance sheet, you check the economy news, you pay attention to the sector, you pay attention to the leaders, and So we are on the overbought zone. We want to have a valid reason to sell. We don't just sell because we are in the overbought zone. So we want to have a valid reason. So we check the balance sheet. If the company or the stock is under pressure, a serious under pressure, well, we will have a reason to sell. Okay. So this is just a quick video regarding level 2, a high frequency trading. I hope you enjoyed the video also, that you will put into practice in order to cream the market consistently. Whether you are trading currency, okay, you are trading stocks, you are trading indices, commodity, bonds, we wish you the very best in your trading, and keep your eyes wide open. Until the next time, enjoy yourself and be very happy. Thank you for watching, and we will speak to you very soon. We are the TSTW S08 traders.